Hi everyone, so I haven't done a video of like a top-down analysis for a really long time, and I just thought that today might be a good day. So I'll start off with the DXY as I usually do, and we can see on the daily time frame that price have taken out its previous week low over here, and it also happens to be the swing low for the past 20 days. So when something like this happens, price tends to reverse into higher prices, and this is on the daily time frame, which means if we were to go down into smaller time frames, we would be able to find a smaller move for us to scalp. So now, since we can't trade the DXY, I'm going into the Euro USD. So this is also the daily time frame. You can see that yesterday price have already taken out the previous week high, right? So a lot of people would anticipate this to just reverse and give us a short for us to short. But because the DXY haven't taken it out yesterday, therefore, it wouldn't have been a grade A trade setup. But right now, since DXY has already shown its signs of reversal, we will be looking for shorts in Euro USD. And now going into the 4-hour time frame, we can see that Euro USD was actually reaching for something of his own, which is the fair value gap here on H4. And you can see that it has perfectly just tapped in and out of this entire H4 fair value gap. So this entire thing is a 4-hour candle. I hope you guys watched the previous video about how to read 4-hour candles, and it closed below the H4. So now going into H1, here I can find this inverted daily fair value gap, which means that this fair value gap used to be a bearish, but now it's inverted into a bullish in line with this H1 fair value gap. So you can find this over here all the way to the end, but I left it there because it's in line with this fair value gap that is bullish right here. So this is also an inverted fair value gap in line with the daily one. So I think that this level itself is quite attractive. And if I was to put a Fibonacci retracement with the ICT levels, this would fit in the 61.8. And if I'm a bit more strict and I push this lower end towards Wednesday, you can see that it's the 70.5. And if you're picking this last swing point, it's around 78.6. So whatever swing points that you're using, I feel that this level is a great discount area if price was to push lower. So this is where I would take my target. And then now let's move into the 15 minutes. So over here, I can see a minute 15 breaker, which has been tapped on during our news release at 8:30. So this whole price movement right now is very predictable, and I like taking trades when it's clean like this. And here's a order block from minute 15. So I feel that price is less likely to hit back into this breaker again, because you can see that this was the last swing low, short-term swing low, and price have already broken beneath it and came back to test its own fair value gap in this move. So here's another low that has just been taken out. So here is the previous week's high that was taken out. I anticipate price to close beneath this level because it has to respect it by the end of the day to consider it like a liquidity sweep in the daily time frame. And I also anticipate for price to drop all the way here, as I mentioned before, but this is also an area where I would take partials. So we have H1 order block over here, partials, the previous week high, partials, and lastly the full take profit over here at the H1, 50% of the fair value gap. So we'll see again how this market play out, and I'll do a review next. Hi everyone, so this is the very next day, and you can see that I have put out my execution arrows to show you exactly where I took my entry as well as my exit. So here was the entry, and the moment we hit TP1, you can see the big swing move back into entry, where potentially people could actually enter at 10.15 macro, 10.10. So I did not take another entry because I was still peeling off this one. And when price finally dropped down again into TP2, which is my H1 order block, it actually stayed with it for quite a long time. I peel out 1/3 of the trade here, 1/3 over here, and over here, when it was 6 a.m. the next day for me in Singapore, you could see that price actually stalled sideways for quite a bit. So I peel off another half of the remaining and let the rest run. So this was when I actually moved my stop loss down into break even, just in case that price wants to return back into all this fair value gap above. In this case, price actually dropped further into TP3. And you can see that it's in line with the inverted fair value gap. So when you're reviewing your trades, you want to see how they actually play out during the points that you think might get a reaction. So here we have a bounce off, we have a consolidation, and here this is also another sort of consolidation. But in between the prices, it actually moves really fast, right? Or this swing move down. So I'm quite happy with this trade. And I hope you guys learned something from this. I'll see you guys in the next one. Bye.